Welcome to Trade Pro. In this video, I'm going to show you a very profitable London breakout trading strategy, then test it 100 times in a row so you can see how it performs over a series of trades. Before I get into the strategy, make sure to hit that like button, subscribe if you haven't, and comment down below for the YouTube algorithm. Also, check out my Webull link down below for 2 free stocks valued up to $1,850. There's no point in not doing it. All you have to do is deposit $100, get your 2 free stocks, and you can just sell them, withdraw the money if you don't want to keep using Webull. So check out my link down below for that. Now let's get into the video. Thanks for listening to that. So there are many different ways out there to trade the London breakout strategy. So I'm going to break it down step by step on how I'm going to be testing it. Now this I haven't done yet because of its subjective nature. I've had so many requests to do the London breakout strategy, test it 100 times, but I've been putting it off because it is so subjective. So just keep that in mind as I'm doing the testing, that it is subjective, and I'm going to do my best job to explain it step by step how I'm going to be testing it. So let's get into the steps. The first step is identifying a range in the Asian session leading into the London Open. Now this is where things get very subjective. Identifying this range is pretty difficult because there are no exact parameters to follow. So how I would do it is use the wicks, use a red box to identify what I see as the range that leads into the London Open. So this would be my range right here, and I would extend this red box out into the opening of the London session. So once you have your range identified, you're simply waiting for a break outside of the range. If the price breaks below the range, you're actually going to be looking for a long position if price returns back to the midpoint of your range. So when there's a breakdown below, you're going to set a buy stop halfway through your range, set the stop loss below the range, and target 2 times the risk. So if there's a breakout above your range, then you're setting a sell stop with your stop loss above the range, targeting 2 times the risk to the downside. So in this example, it would look something like this. When this candle breaks down and closes outside of your range, halfway into your range, you set your buy stop, put the stop loss just below the range, and target 2 times the risk. All right, so we're getting a sort of fake out reaction to get our entry. If there's a fake breakout and then it returns back, we're looking for a continuation in the opposite direction. All right, so now I'm going to go through a few different examples so you can get a better idea of how I would set up the range and how I'm going to be doing it for these 100 tests. So for this example, I would be looking to these upper wicks for the top end of the range, and then these wicks down here for the lower end of the range. Extend that out into the London Open, and we see a clear breakdown below the range and then a return into the range, passing through that halfway point, which would hit our buy stop, causing us to enter a long position with our stop loss just below the range and targeting 2 times the risk. So this one would be a good one. So here's an example where the breakout occurs before the London Open. In this example, you can still take a trade. Do it like this, just as you normally would. Identify the ranging period right before the London Open, and then you're just going to classify this as your breakout, so you can look for a short position if price comes back into your identified range. So the short entry would get triggered in right at the halfway point. You would still do the exact same stop loss and target of 2 times the risk, and this one would be good to go. All right, so here's another example. In this one, we have a clearly defined sideways range here. So use your tool to mark it out and project the range out into the London session. Here's our range. We wait for the break. We get a breakdown, set our buy stop halfway into the actual range here, and set our stop below, target 2 times that risk, and it's good to go. All right, so final example before I get into the 100 tests here. On this one, we get a clear range with this being the high wick, and then the low wicks down here. Extend that range out into the London session, and clearly there's a break above, and then return to the middle, triggering our sell stop into this position and targeting 2 times the risk. This one is also good to go. So I'm going to get into the 100 tests and show all the results at the end. Stay tuned. All right, the results are in after the 100 tests of the very popular London breakout strategy, and the results are good. So the strategy that everyone knows and loves did do well. One thing we need to keep in mind, though, is that it's very subjective, and there was no way for me to make it extremely objective without completely changing the strategy. So keeping it in its true form of the London breakout strategy, it's going to be subjective no matter what, unless you completely change it. So yeah, it is what it is. Just keep that in mind with the results, that this is what I got from going through and, doing it how I would do it, not how you might do it. So definitely do a lot of testing if you are going to be trading a strategy like this. But, it was fun to go through and see what this type of strategy would do. Normally this is not my type of thing, but anyway, let's get into the results here. So did it on the 5-minute time frame, but either way, you only get 1 signal per day, because you're only taking trades at the beginning of the London session, or at some point, 1 trade during the London session at some point along there. And this took data from both pound dollar and euro dollar, and it was using a 1-to-2 risk reward ratio, which took 6 months of price data to find those 100 signals. You don't always get the signal. So, you might go through a whole London session without getting a signal. There were 49 winners and 51 losses. The most wins in a row was 6, and the most losses in a row was 7. So the gain on the account, 47%. So, it did really well. Some good results out of that one, and I'm sure you can improve it and make it profitable, but just like anything else, there's no holy grail. I know this is a really popular one, but yeah, no holy grail, just a good strategy that you can be profitable with, just like a lot of strategies out there. So, guys, it all comes down to the consistency and discipline and risk management. So it is what it is. We'll go to the spreadsheet and pop it up on there. All right, here it is on the spreadsheet, falling at spot number 7, tied with 8, 9, and 10. So it did really well considering that there are now 57 strategies on the spreadsheet. So, it's going to be crazy when this spreadsheet hits 100. We're going to get through every single strategy in existence. Some people have said I'm running out of strategies, but the truth is I have way too many to test. People have requested so many different strategies. I have a massive list written down, so I'm not even close to running out of strategies to test. And it's going to be ridiculous how many tests I've done by the time this channel eventually fizzles out one day. No channel lasts forever. So anyway, this strategy, keep in mind it's extremely subjective, so you need to do your due diligence, do your testing, extra testing on top of your normal testing, because you need to have another level of trading psychology and discipline when trading something that is this subjective. In order to be consistent with something that is hard to be consistent with, you got to be experienced, have a lot of practice. So just be careful with this type of thing. I typically don't recommend this style of trading, and I still don't, even though it got good results. That might change hugely from person to person, even with the exact same setups. So just keep that in mind and be careful, guys. Thanks for watching. Make sure to like, a comment down below for that YouTube algorithm, and subscribe if you haven't. Check out the Webull link for 2 free stocks valued up to $1,850. Why not get 2 free stocks? You can literally just sell them after you get them and then disable your Webull account, take the money. But if you want, you can keep trading on Webull. It doesn't matter to me, but I think Webull would like it if you did that. Anyway, have a nice day, guys. Thanks for watching. Appreciate you.